right, fair warning. I have way too many opinions about this one, so Jessica, you've got to reel me in if I start ranting. Welcome to episode 32 of the Joinprop podcast. I'm Ken, and that's Jessica.
Oh, I am absolutely ready with the emergency brake today.
Yeah.
Because honestly, you've been pacing around the studio about this for, what, a solid month?
It was just, there's so much shifting right now.
Yeah, you've been muttering about, like, profit splits and trailing drawdowns since maybe episode 30. And here we are, finally, episode 32, and the whole landscape has basically been set on fire anyway.
Right. Yeah, they both just changed all their rules. So we're getting into it. The massive 2026 overhauls, Topstep, and Apex trader funding.
Yeah, so for the listener, if you're late 20s, early 30s, you're looking to get funded but haven't quite crossed that line yet, we're going to figure out which one of these actually respects your time and your money.
Because neither of them are charities. I mean, look, if you're anywhere near pure futures trading, Apex and Topstep are the heavyweights. They just are. It's not really up for debate. But the problem is they're built on completely opposite philosophies. Like, Apex is for the high-volume, cheap entry, massive scaling crowd.
The blow an account and grab another one for $15 crowd.
Exactly. You string together 20 of them to build this empire. Whereas Topstep is built for structure. It's about discipline, risk management, and getting to a massive first payout.
Okay, so they want you to trade one account, but just trade it really well.
Right. And to figure out which path makes sense for you, we have to talk about what they just did, because I am so incredibly glad I don't have to talk about the old subscription models anymore. I absolutely loathed paying monthly for a test.
Wait, you don't have to anymore. Mostly.
Mostly, yeah. But let's start with Apex. March 1st, 2026, they drop Apex 4.0. And they basically took their entire old rulebook and just threw it in a wood chipper.
Which, thank God. Because reading their old FAQ was like trying to decipher ancient Greek.
It was exhausting. So the absolute biggest shift is they killed the monthly billing model. Dead. Gone. It's now a one-time evaluation fee. No rebills.
Okay, but wait, they killed a bunch of other stuff too, right?
Well, yeah, they threw out the MAE rule.
Stop.
Yeah.
Wait. Explain the MAE rule, because I remember you complaining about this constantly.
Maximum adverse excursion.
Oh.
It was this highly technical way of tracking drawdowns that drove people insane. Essentially, it tracked your drawdown based on the absolute worst possible point a trade reached while it was open.
Even if it bounced back.
Even if it bounced back. It penalized you for just letting a trade breathe. Like, if you entered a trade and it immediately went against you by 10 ticks.
Then it rockets up to a 50-tick profit.
Right. The MAE still tracked those negative 10 ticks against your safety net.
That is so dumb.
It was a nightmare unless you were a hyper-aggressive scalper. So that's gone. They threw out the 5-to-1 risk-reward limit, too.
Which is what, exactly?
Basically a rule saying your winners had to be mathematically proportional to your losers in this incredibly rigid way, or your account got flagged. Gone. They also killed the one-direction rule.
Wait, the one that penalized you if you only traded long?
Yeah. Which makes zero sense. If the market is going up all day, why wouldn't I only trade long?
Right, it's just following the trend.
Exactly. So that's dead. And they got rid of the 7-day minimum trading period. You used to have to trade for at least 7 different days to pass. Now, you can pass it in 1 day.
Okay, pause. You are listing all these great things, but you're leaving out the massive glaring catch in the 4.0 update.
It's not a catch, it's just a parameter.
It is a massive catch, Ken. The new evaluations on Apex expire after 30 days. It is a literal ticking clock. You don't have unlimited time to pass anymore.
Right, but...
If you don't hit the profit target in 30 days, the account is dead and you have to buy another one.
Okay, but look at Topstep's response. In February, they added this express-funded account thing, which is their one-time fee fast lane. But they still have the monthly combine, right?
Yeah, the trading combine is still there. $49 a month.
Right. So Topstep didn't kill subscriptions, they just added a choice. And the combine rolls over indefinitely. As long as you pay that $49 a month, your progress saves.
Exactly. You could take 3 months to pass if you want to, which is huge.
I mean, sure, but why would you want to? Look, I'm going to argue that the 30-day Apex expiry is totally fine, because if you're a real day trader taking a 50K evaluation, the profit target is $3,000.
Right.
If it takes you 3 months to make $3,000 on a $50,000 account, you're probably not ready to be funded. I'm sorry. The 30-day clock is a non-issue for someone who actually knows what they're doing.
Okay, no, I strongly disagree with that. Have you met human psychology?
I have.
The second you put a 30-day ticking clock on someone's screen, you force bad habits.
Yeah.
You just do.
Yeah.
Let's do a real scenario.
Okay, lay it on me.
Say you have a full-time job. You can only trade the first hour of the morning, right before you have to log into your actual marketing job or whatever. You get 2 weeks in, you're only up $1,000, you look at the calendar and you panic.
Because time is running out.
Exactly. Time is running out, so what do?
You stick to your strategy.
No, you don't. You over-leverage. You take a stupid, massive trade. Maybe you trade news. Maybe you try to catch a falling knife just to try and hit the target before it expires, and you blow the account.
I mean, yeah, people do that.
Topstep's indefinite rollover is so much safer for normal people.
Yeah.
It lets you actually practice risk management without a literal gun to your head.
Okay, but do you know what that safety costs? Let's talk about the actual dollars and cents here, because this indefinite rollover thing is exactly how people bleed out $1,000, $50 at a time.
All right, let's do the math.
Let's break down the baseline fees. We'll use the $50K account as our standard because that's what everyone starts with. The retail cost for an Apex eval right now is $197 for their EOD account, or $131 for the intraday.
Okay. And Topstep is $49 a month for the combine.
Right. So up front, sure, Topstep is way cheaper if you look at the sticker price, but nobody pays retail for Apex, ever. Never. It is an open secret in the prop firm world. Apex runs these massive promos constantly, like the APEC 90 code. When they run a 90% off code, that $131 intraday evil, it drops to about $13.
$13.
$13 for a $50,000 evaluation account.
Okay, what is the catch? Because nobody is handing out 50 grand for the price of a sandwich. I'm sorry. No.
Okay, fair. The catch is the back-end fee.
Ah, there it is.
Yeah. So you pay your $13, you pass the evil. To actually get the live funded PA, the performance account, you have to pay an activation fee. For Apex, it's between $79 and $99 depending on the account type.
Okay, so it's not $13. It's $13 plus basically $100.
Still, $113 total to get a funded $50K account is absurdly cheap. And let's look at Topstep's hidden fees. You pay your $49 a month, but wait, Topstep also hits you with like a $39 a month data fee for advanced market data.
Wait, Apex doesn't charge for data.
Nope. Included in the evaluation. And if you pass Topstep's combine, their activation fee is $149. Oh, wow. Okay.
So let's run your exact scenario. The person with the full-time job who wants to take their time, they take 3 months to pass Topstep. That's 3 months of subscriptions, $147. 3 months of data fees, let's call it $117, plus the $149 activation fee.
That's over $400.
You just spent over $400 to get funded with Topstep. I could have bought like 30 Apex evaluations for that on a promo day.
Okay, but you're assuming the person blowing through 30 Apex accounts isn't destroying their mental health in the process. Clicking buy 30 times because you keep failing is soul-crushing.
Okay, that's true.
But, all right, mathematically, I see your point. Apex definitely wins on the raw per attempt cost. But Topstep wins if you, I don't know, if you want a calmer environment and you hate the 30-day trap.
Yeah, exactly.
But let me ask you this. Why do people need 30 attempts? What is actually causing people to fail these cheap $13 evaluations so often?
Oh, that's easy. It's the drawdown rules. It is almost always the drawdowns. And this is where the math gets incredibly sneaky. Sneaky how? Like a drawdown is just how much money you can lose before they fire you, right?
Right, but it's how they calculate that loss that kills people. Let's look at Apex first. The big change with Apex 4.0 is they made end-of-day trailing draw down the default. We call it EOD.
Okay, EOD.
On a $50K account, your trailing drawdown is $2,000. That means if your account balance drops $2,000 below its high watermark, you fail. But because it's EOD, that $2,000 threshold only recalculates based on your account balance at the exact end of the trading day.
So like 4:59 p.m. Eastern.
Exactly, 4:59 p.m. Whatever happens in the middle of the day doesn't permanently lock in. And crucially, Apex EOD has no daily loss limit. 0.
Okay, walk me through that. Let's do a hypothetical day.
All right, you start Tuesday morning with your $50K account. Your failure point is $48K. You take a trade, it goes horribly wrong, it's noon, and you are down $1,900. Your account balance is $48,100.
I am sweating bullets at this point.
Yeah. Oh, you are hyperventilating because you are exactly $100 away from blowing the account. But, and this is the key, you have no daily loss limit on Apex. They do not lock you out.
So I can keep trading.
Yes. So you compose yourself, you find a great setup at 2 p.m., and you claw your way back. You close the day at break even, $50,000.
Oh, phew.
Because you closed at 50K at 4:59 p.m., your drawdown limit doesn't move. You survived. Your failure point is still 48K for tomorrow. You are totally safe.
Okay.
Now contrast that with Topstep's Combine. Topstep uses an intraday trailing drawdown.
Intraday, meaning it tracks all day long.
Real time, tick by tick, and it tracks your unrealized profit and loss.
Unrealized? Okay, wait, explain that. Break that down with a really specific example.
All right, imagine you're trading Topstep. You buy, I don't know, a NASDAQ contract, the NQ. It shoots up. You catch a massive trend. You are currently up $1,000 on your screen.
Okay, so my account balance shows 51K?
Shows 51K, but you haven't closed the trade yet. It's unrealized profit. You haven't clicked sell.
I'm feeling like a genius, obviously, holding for more.
Right. But then the market suddenly reverses. Fed chair says something, an algorithm kicks in, huge red candle. You panic, you freeze, and you finally close the trade at exactly where you started, break even. You made $0 profit.
Okay, frustrating. I want to punch my monitor, but no harm, no foul. My balance is still 50K.
Wrong. With Topstep's intraday rule, because your account touched that $1,000 high watermark during the open trade, your trailing drawdown threshold still moved up by $1,000 permanently.
Wait, are you serious?
I am dead serious.
If I make $0, I take home nothing, but I lose $1,000 in my safety net.
Yep. On Topstep, a 50K account has a $2,000 trailing drawdown. So you start at 50K, failure point is 48K.
Wow.
During that trade, your account value touched 51K. So the failure point trailed up $2,000 behind that, moving to 49K.
Even though I closed at 50K?
Even though you closed at 50K, your new failure point is 49K. Your breathing room was just cut in half by a trade where you didn't even lose money.
That is brutal. That is honestly brutal. So I'm basically penalized for letting a trade run if it doesn't stay up there.
Yes. It forces you to scalp. It forces you to take profits quickly because if you don't, you're literally choking your own account. It creates this immense psychological pressure.
To just close winning trades early to lock in the high watermark.
Exactly. So the drawdown doesn't crush you. And on top of that intraday trailing drawdown, Topstep enforces a strict $1,000 daily loss limit on a 50K account.
So going back to your earlier example where I was down $1,900 at noon on Apex, if I did that on Topstep.
You would have been locked out hours ago. If you lose $1,000 in one day on Topstep, boom, terminal locks up. You are done for the day.
Okay, so Apex sounds vastly superior for someone who wants to take slightly wider swings, right?
Mm-hmm.
Because they don't have a daily loss limit on EOD, and they don't track the unrealized stuff intraday. I can actually let a trade breathe.
Exactly. Plus, Apex allows you to hold positions overnight. Topstep strictly forbids overnight holding. All positions must be closed before the market closes. If you leave a micro contract open at 4:59 p.m. on Topstep, they will fail your account for a rule violation.
Right, which makes total sense for their respective vibes.
Yeah.
Topstep is like, we are day traders, we go to bed flat, we protect our capital, we enforce strict loss limits.
Yeah.
And Apex is like, do whatever you want, swing trade, hold overnight, hold through huge drawdowns, just don't hit the bottom number.
Pretty much, yeah.
Okay, so let's say by some absolute miracle, I navigate the intraday trap on Topstep or the 30-day ticking clock on Apex, and I pass. I get the congratulatory email. I pay my activation fee. I'm funded.
You made it.
I made it. How do I actually get my money out? Because this is where the rubber meets the road.
Oh, yeah. This is the core tension of the entire industry, the payout mirage.
Mirage. I love that word.
Okay.
So let's talk profit splits first, because that's what everyone advertises.
Right. The headline numbers, Apex says, we give you 100% of your profits up to $25,000. After that, it drops to a 90-10 split, meaning you keep 90%, they take 10.
That sounds incredibly generous.
It is. I mean, keeping your first 25 grand is huge. Now, Topstep used to do something similar, 100% of your first 10K. But as of January 2026, they changed it.
Changed it how?
New accounts on Topstep start at a 90-10 split immediately. You give them 10% from day one, but once you've withdrawn $10,000 cumulatively, then you flip to 100%.
Okay, honestly, 90-10 versus 100% early on doesn't seem like a deal breaker. Like if I make $1,000 keeping 900 versus 1,000, I'm just happy I made money.
No, you're right. It's not the split that matters. The deal breaker is the bottleneck, the cap on your first payouts.
The cap.
Yeah.
Let's talk real numbers. I'm in a 50K account. I had a great month. What is the maximum check I can write to myself on month one?
On an Apex 50K account, your first payout is hard capped at $1,500.
Okay, and Topstep.
Topstep's first payout ceiling on a 50K account is $5,000.
But 5,000 versus 1,500 on the same account. I need a second.
I know, it's a big gap.
Why would anyone choose Apex if Topstep lets you pull out 3 times as much?
Okay, hold on. Let me defend Apex here because there is actual math behind this. Apex uses what they call a 6-step payout ladder. So payout 1 is capped at $1,500. Payout 2 is capped at $1,500. Then payout 3 is $2,000. Then $2,500 and $2,500 again. And by step 6, month 4, basically, there is no cap. You can withdraw whatever is in there.
So it takes me 6 withdrawal cycles just to be uncapped?
Yes. But Apex lets you request payouts twice a month, every 2 weeks. Topstep lets you withdraw up to 4 times a month. But look, if you are a trader who hits small, consistent base hits, a couple $100 a day.
Right.
Apex's ladder is actually great because you are keeping 100% of those withdrawals until you hit $25,000 total. Mathematically, over 6 months of consistent base hits, Apex pays out beautifully.
Base hits,
Yep.
sure. But you are glossing over the friction. I was reading the fine print on the Apex terms you printed out. To even get that $1,500, you have to trade for a minimum of 5 qualifying days where you make at least $100 profit each day.
Well, yeah, they want to see you actually trading, not just making one lucky trade and cashing out.
But wait, there's more. They have a 30% consistency rule, meaning your biggest single trading day can't make up more than 30% of your total profit when you request a payout. And D, you have to maintain a safety net buffer.
Okay, yes, it's friction.
It's an obstacle course. Let's play this out. I have a 50K account. I have a massive day. Say I catch a huge sweeping trend on gold and I make $4,000 in 2 hours.
A great day.
An amazing day. On Topstep, I can say, great, my max pitch is $5,000. I'll take my money. Apex says, whoa, whoa, whoa. That $4,000 was more than 30% of your total balance. You can't withdraw yet.
Right, you have to keep trading.
Exactly. You need to keep trading, risk that money, and make more small trades until that $4,000 is only 30% of your total. That is a nightmare for someone who has large, infrequent winning days. It basically forces you to overtrade to dilute your own good days.
You are absolutely right. If your strategy relies on one massive home run trade a week, Topstep is 100% the better firm. The $5,000 ceiling is the highest in the industry for a 50K account.
So why bother with Apex?
Because you're missing the forest for the trees here.
I'm talking about actually getting my cash out of the system.
You're asking why people tolerate Apex's $1,500 payout cap. You're asking why people put up with the 30% consistency rule and the 5 qualifying days. The real reason, they aren't trading one account.
What do you mean?
This is the lifestyle, the prop firm scalability. This is the real reason Apex is a juggernaut in this space. On Topstep, you are hard capped at 5 simultaneous funded accounts.
Okay, 5 accounts.
The absolute maximum capital they will let you manage is $300,000.
Which is a lot of money. I would love to manage $300,000.
There is. But Apex's trump card is that you can run up to 20 funded accounts simultaneously. 20. Up to $1.5 million in funded capital under your control.
Wait, so you're clicking 20 mice at once?
Yeah.
How does a human being execute trades on 20 different web browsers at the exact same time?
Trade copiers.
Trade copiers.
Yeah, it's software. You link all 20 Apex accounts to one master account. There's programs like Quantower or NinjaTrader with copier add-ons.
So you just link the APIs or whatever?
Exactly. You execute one trade on the master account, you click buy once, and the software instantly copies that exact same trade, the same entry price, the same stop loss, the same take profit across all 20 accounts in milliseconds.
Okay, so
yeah.
Let's do the math on that. If I have 20 50K accounts.
And you make a trade that nets you, let's just say $200. A modest $200 win on the master account. You just wait for a moving average crossover, you grab 10 ticks, you get out.
Times 20 accounts.
Yeah.
That's $4,000 from one $200 trade.
Exactly. And when payout time comes, sure, each account is capped at $1,500 for the first payout, but $1,500 times 20 accounts. You just pulled $30,000 out of Apex in a single payout cycle.
Oh my God.
Right. That's the empire. That is the Apex business model.
Yeah.
You risk $13 a pop on evaluations during a promo. You fail a bunch, whatever.
But eventually you get 20.
You build up a portfolio of 20 funded accounts. You use a copier. And suddenly those small safe base hits, the ones that easily pass the 30% consistency rule, are paying you like a hedge fund manager.
That feels insane. Like, is that even legal?
Completely legal. They encourage it. They literally sell their own integrated trade copier software now.
Wow. Okay. How does this compare to the broader prop firm world?
Yeah.
Because I know there are other names out there like FTMO, Solbio. The 5%. Do they let you do this?
Yeah, let's keep this tight because we could talk for hours about the European firms. The short answer is, for pure futures, Apex and Topstep are the only two that matter.
Really? What about the 5%? I see them on Twitter constantly.
The 5% goes up to $4 million in funding, which is wild, but they start you at a 50-50 profit split.
Rate half.
Yes, you do all the work, you take all the psychological stress, and they take half your money right out of the gate. It's rough. Plus, they are more Forex and crypto focused.
Ew. Okay, and FTMO. I hear about FTMO all the time.
FTMO is the absolute king of the industry globally, but they are focused on Forex and CFDs. They're regulated in the EU. They're incredibly professional. They have amazing tech, but their split is 80-20 to start, and their evaluation is a two-phase process.
2 phases.
Yeah, you have to pass a challenge phase, hit a profit target in a month. Then you have to pass a verification phase, which is another month of hitting a slightly lower target. It is exhausting.
Oh yeah, no thanks.
Exactly. For futures day trading, where you want to trade the S&P 500 or the NASDAQ, don't even look elsewhere. It's Apex or Topstep.
Okay, but hang on. You just spun this massive glittering web about $1.5 million empires and 30 grand payouts and trade copiers magically multiplying your money. Let's bring this back down to the ground level.
Uh-oh.
No, seriously.
Yeah.
Because I'm sitting here, and I'm sure someone listening is sitting in their car right now thinking, wow, I just need $13 in a trade copier and I'll be rich.
Right, the marketing pitch.
What are the actual odds of achieving this? You mentioned earlier you brought industry data.
Yeah.
What is the reality?
Okay. You want the gut punch.
I want the stats. Stop hyping the empire and tell me what the pass rates are.
It's bad.
Tell me.
Industry-wide, across all pure futures prop firms, only 5 to 10% of traders pass an evaluation.
Wait, 5 to 10%. That's it.
That's it. 90 to 95% of people who pay that evaluation fee fail the test. They hit the trailing drawdown, they hit the daily loss limit, or they run out of time on the 30-day clock.
Okay, but of the 5 to 10% who pass,
Yeah.
they get funded. They're making the 30 grand payouts, right?
No. Of the people who actually get funded, industry estimates suggest only 7 to 12% of them ever see a meaningful payout.
Wait, what?
The vast, vast majority blow their live funded account before they can navigate the 30% consistency rules or the 5 winning days or the trailing drawdowns, because once it's live, the psychology changes. It's real money now.
Okay, I am doing the math in my head right now.
Yeah.
5% pass. 10% of that 5% get paid. That's 0.5%. 1 in 200 people actually pull real money out of this.
It's extremely low. The funnel gets very narrow very quickly. And there's one more stat. The average trader who tries this, who buys an evil, fails, buys another, fails, gets funded, blows it, buys another evil. The average person who eventually quits and walks away entirely has spent between $5,000 and $20,000 in evaluation fees before giving up.
Okay, stop. Just stop. So their entire business model relies on 90% of us failing and paying evil fees over and over.
Yeah.
Man, that's not a trading firm. That's a casino.
Well,
They're selling a slot machine disguised as a financial career.
look, I'm not going to blindly defend the firms, all right? I know how it looks when you lay the math out like that, but I will push back on the scam narrative because it's not a scam.
How is it not a scam if they literally build the math knowing 99% of people will fail and bleed out 20 grand?
Because the market doesn't care about you. Trading is inherently that difficult. It is not the firm's fault that retail traders drastically underestimate the discipline required to be consistent.
But the way they set it up.
Both Topstep and Apex are backed by Plus 500 US, which is a massive, regulated FCM Futures Commission merchant. They have multi-year track records. Apex has verified million-dollar payouts. They literally show the receipts on their Discord.
Sure, someone wins the lottery too. That doesn't mean buying scratch-offs is a good career choice.
But the test isn't rigged. The rules are stated clearly. The problem is people buy a $50K account for $13. They treat it like a video game. They go max leverage, and they blow it in 3 minutes because they wanted to make $2 grand in one candle.
Right.
Then they buy another one. That's lack of discipline, not a scam. If you went to medical school and failed out because you didn't study, is the university a scam?
Oh, come on. That is a terrible analogy. Medical schools don't run 90% off flash sales on tuition.
I mean,
They heavily market the lifestyle. You just did it yourself. The 20-account empire, the trade copiers, they flash these massive promo codes. APX90, 90% off. It completely gamifies it.
they're a business. They have to market.
It turns evaluations into a slot machine. Hey, you lost. Put another quarter in. It's only 13 bucks. They hide the failure rates behind discount codes so people don't realize they're bleeding to death from 1,000 paper cuts.
And I'm telling you, the people who actually succeed treat it like a profession. They don't gamble. They use the $13 evils to lower their overhead risk. If the firms made the test easier, if they removed the trailing drawdowns, they'd go bankrupt, paying out bad traders who get lucky for 1 week and then blow up the firm's capital. The gauntlet exists to protect the firm from gamblers.
I'm just saying, if their revenue is 90% valuation fees from amateurs and 10% actual profit splits from winning traders, they are in the business of selling tests, not backing traders.
And that right there is the absolute sobering reality of the prop firm space. It is an opportunity, a massive one. You can access life-changing capital, but it is a gauntlet. It is designed to break you if you don't have an ironclad strategy.
Okay, so we've torn everything down. We've terrified everyone. Let's build it back up for the listener. Real takeaways. If someone is standing at the crossroads in 2026, Topstep Express versus Apex 4.0. Give me the summary.
All right, summary. If you are an intraday volume trader, if you want for risk 15 bucks an attempt, if you don't mind a 30-day clock, if you want the flexibility of end-of-day drawdowns without a daily loss limit, and your ultimate goal is to use a trade copier to build a 20-account empire making consistent base hits, go Apex. Apex 4.0 is basically built for you.
Okay, and Topstep.
If you are a disciplined, conservative trader, you hate feeling rushed, you want to take your time in the combine, you want to wait for the perfect setups, and you want to hit 1 or 2 big trades a month and pull out a massive $5,000 first payout without worrying about a 30% consistency rule holding your money hostage.
Right.
Go Topstep. You want the structured environment, the strict daily loss limits to save you from yourself, and the institutional backing.
Okay, and my takeaway for you listening to this right now, please treat every evaluation fee as a paid practice session. Do not treat it as a guaranteed lottery ticket to a funded lifestyle. Expect to fail.
That's good advice.
Use it to learn your own psychology when real money, even if it's simulated real money, is on the line. Watch how your heart rate spikes when that intraday drawdown moves against you. Protect your downside and don't spend 20 grand trying to pass a $13 test.
That is actually profound. Paid practice. I like that. That's a really healthy way to frame the sunk cost.
I try.
Well, let me leave you with a provocative thought then, building on your casino point earlier. If prop firms ever shifted their model, say regulations changed or the CFTC stepped in, and they actually required you to submit a broker statement proving you were a profitable trader before they let you buy an evaluation, would the industry survive?
Oh, wow.
Would they go bankrupt overnight if they couldn't sell tests to amateurs? Something to think about.
I don't think they'd sell a single $13 test ever again.
Maybe not. Anyway, next week, we're getting into the weeds on trade copiers because apparently I need to teach you how to click 20 mice at once without blowing up a server.
Oh, I'm bringing safety goggles for that one.
Perfect. All right, that's it for this deep dive. Stay disciplined out there, watch your drawdowns, and we'll catch you on the next one.